At any rate, good morning, good afternoon, wherever it may be, whatever it may be. I hope you're having a lovely, lovely morning, afternoon, as it were. We are going to go ahead and jump in. See, we're going to probably look at the data. I think we have some data coming out today in the markets. So we're going to see if there's any economic data that could affect trading today. And we're going to certainly look to see if any of our private members have questions. I didn't see any overnight. Yeah, nope, nothing. There was one question from Be Good that I can talk about, but the long and the short of it was we didn't really have any questions overnight from the private group. So if you are watching on YouTube, whether you're live or not, you can always ask questions in the comment section. You could always put a question in the if you're watching this after the fact, there's that comment section. You can put that in there. I do get to those comments, although it might not be the same day. Ideally, it is the same day, but we're happy to help. So what we're here for, this is the free live beginners trading session, right? It's the beginners lab. So we're here to kind of help people who are interested in learning about trading, to learn some ideas about trading. We're not giving any investment advice, so please make sure to contact your licensed investment advisor before risking your money on the markets, because that is risky. You can lose money doing that. But we teach the nuts and the bolts of markets and how they work. So let's see here. I'm going to throw up a QR code. That is going to lead you to our website. It even has a website listed right on it. So let me see. I don't have my glasses on. That's a dumb move. There's some days where my eyes work better than others, and I don't realize it. And then I'm like, oh, why does this look blurry all of a sudden? It's because I didn't put my glasses on. I actually got decent sleep last night. I was up real late trading the European session 2 nights ago, and I had intended to just trade the open and see if there were any trades and then go to bed at 1. And then I lost a trade, and I'm like, okay, well, let's see if we can look for another trade, try to claw some of that back. And that had me going to bed at 3 a.m. my time. And because the midnight open, the open is midnight my time. So that's how that works. And I was just dead dog tired, man. I was hurting yesterday. So, I came in, I got it done. I felt unreasonably good yesterday during the morning. It was a weird scenario. I think, I don't know what that's about, but I hit the sack in the afternoon, slept a little bit longer than usual because I usually sleep in the afternoon because I get up very early. Long story short, got plenty of sleep last night. Feel a lot better. Hopefully there's no yawning during the show. So at any rate, though, like I said before, if you are watching, whether it is in the private room or right here on YouTube, or if you're watching this after the fact, feel free to ask questions. We can answer them. Looking at the charts right now, I can tell some kind of data must have just come out. So let's take a look here. And I'll share the screen. I think I went to sleep and set my alarm a little bit later today because of data coming out this morning, right? Because if the data's coming out, that means you can't depend on the charts, right? That was the ECB press conference, and we also so that's not for another 10 minutes, but we had the GDP, quarter-over-quarter GDP number, and employment claims came out, which every Thursday is employment claims. So you can always depend on that happening. Plus, the euro had its basically its version of the FOMC. Their private central bank went ahead and announced their main refinancing rate, monetary policy statement. I'm going to refresh the screen so that we can actually get these data. 1 second. Okay. Hold on a minute. Okay, here we go. Friday the 3rd, November. Okay, we're all the way in November. There we go. Today is the 26th. Okay, so yeah, in fact, I had read that the no hike in the European rate, although they say that they reserve the right to hike later, I think what's happening over there is they just can't afford to hike anymore. Their economy is pretty much in a basket case because they're not getting energy at a very good rate, and energy is an input to everything. And so when your energy goes up by 50 or 100% or whatever has happened, their profits are being cut in a massive way that way. So, and no amount of subsidy is going to help anything in the real world. So they're going to see that flattening of the refinancing rate month to month, at least for now. I know if the U.S. hikes, then of course the other countries are going to want to hike to keep up, right? Because that will, I mean, for many reasons, but one of them is it will make the dollar currency a bit more attractive than theirs, and so they need to keep their rates close to it, so there's not like a lack of balance in the market already worse than there is. So it is what it is. Let's see. So we had our GDP quarter over quarter looks better than expected. Now, of course, we know that a lot of these numbers are fake. But it doesn't matter if they're fake or not. What matters is how they affect the market. So if the market's going to perceive these numbers as real, at least in the short term, then, we got to go ahead and want what the market wants, right? So GDP came back a little bit better. Unemployment claims came back actually a tad worse, but only 1% worse than expected. So not really a staggering number. And then, of course, the ECB press conference is beginning pretty shortly. So if you're trading the euro, you might end up in trouble. And it seems, based on a few things, I actually was like watching how the Canadian dollar's data was messing up the US dollar. So it seems that a lot of the central bank, the way it usually works is that whatever the US dollar is doing or saying tends to be something that'll kind of mess things up around for all the rest of the currencies, or I don't want to say mess it up, but it'll affect the way that the rest of the currencies go, because the dollar is kind of the big gravity, that messes with everything, because, the dollar is still the major world reserve currency at this point. But it seems as if the other currencies are having a grander effect on each other, at least in the current market. It may just be a function of a lack of liquidity or volatility, because the volatility certainly has fallen off a cliff. And the reason for that is if you look at the high time frame. I'm going to zoom in here so you guys and gals can see the numbers here. But the high time frame here, let me erase all these metrics here. Just quick zoom in. Okay. And we still have our drawings. Okay, so you can see that the euro or USD is bouncing, and that's because in a big way the DXY is bouncing. So the dollar actually was heading up strong, and then it took a break, right? So if I were to overlay the DXY onto this chart, which is the dollar compared to other currencies, like the other major currencies, so you can see that the dollar is in exact opposite direction of the euro, right? So, and that's a reflection. Now, this dollar, this orange line, the Dixie, is actually compared to primarily, I think, the euro, or at least in largest part the euro. Let me see here. We got, sorry, I was looking at the messages over on YouTube. Comparison to the euro, the yen, the British pound, probably in part the Aussie dollar, maybe the Canadian dollar. So this, I think the Chinese yuan is in there in a small percentage. And so the dollar has been hiking up in comparison to those in a big way, which is reflected in the actual EUR-USD headed down, because it's in a sense very much the opposite of the Dixie, right? Very much here. So you could almost kind of ignore the DXY. Just understand that the DXY right now is in a bit of a turnaround. So the dollar was getting very strong for a very long time, and then it got a little weak. And not weak, it was taking a break. But to look at the metrics high time frame, it does appear that this is a trend that is going to continue downwards. It's just a question of how high will this big pullback go, right? So we got Mark Rutherford. Hey, mate. Got a few Algo members here hanging with the king. That's right. Love it, man. Thanks for coming on and making some comments. Again, don't be afraid to ask questions. Yeah, so we'll take a quick look at the rest of the data for the week. We have Friday, tomorrow, core PC index month over month. So this is going to be a measure of inflation, which is going to be not as big as the CPI, but we'll read exactly what that is. It's the change in the price of goods purchased by consumers, excluding food and energy. Okay. But the way it differs from CPI is that it measures goods and services targeted towards and consumed by individuals as opposed to mass consumers. Prices are weighted according to total expenditure per item, which gives important insights into consumer spending behavior. CPI is released about 10 days earlier and tends to garner the most attention. So this, PCE is kind of after the fact. It'll probably reflect the CPI. But the consumer sentiment seems to be a pretty strong metric. So tomorrow, say 6:30, well, really 8:30 a.m. EST and then 10 a.m. EST, that's on Friday, we're going to see some action in the market. It'll add volatility. Again, the way that I handle news is that it's hard to predict which way the chart's going to go, as can be reflected by a lower time frame of this chart that we're looking at right now. So we're gonna look at that and what that looks like. Okay, so let me fast forward to the current time here, if I can find the button. Okay, so this is the 30, so I'm going to roll to the 5. That's still the 30. All right, sorry. Looks like I have 30 listed. Okay, 33 hour, 5 minute, here we are. Okay, quick roll to the front. Okay, so if you look here at the 5 minute, you can see that there's a lot of like wickage. So the actual data, this is the euro. Let me take a look at, say, like the, I don't know, the USD CAD, because Canada, I don't think, had any data coming out today. 6:30, and then we'll roll to the 1 minute so we can see this in a very granular sense. Okay. So if we look at the data, and the data announcement was 6:30 a.m. for the USD. We drop a line right at 6:30. Okay, so I'll put a line next to it, actually, because this big long wick upwards is the data announcement. Okay, so according to the data, the stronger data seemed to be, and again, it's hard to say, but it seemed to be the GDP, right, being strong by a significant percent. I think about 10% higher than expected. So that you would think that the dollar would get stronger, right? So you'd think the dollar would head up, and head up it did. But you'll notice here that the initial move up, and this is on the minute chart. You're looking at a very, very tight chart here. It headed up, and then it got crushed back down. So the data came out, and the data reflected a move up because the dollar was going to be strong, and yet it got crushed down, and then you had this sweep of these lows down here. Now, what does that mean? Well, when the data came out, a lot of people probably thought, oh, well, dollar's strong, right? So we're going to go long. And so they did. So dollar's strong, we're going to go long. And they had their stop loss maybe down here, right? So the market makers went ahead and allowed that move up to happen to get people excited and into the longs, and who knows where their targets were, up high. And then they went ahead, and I'm saying this as an assumption, right? Not as I know for a fact. What's up, Brad? Brad, was always good to have Brad in. Brad's super devoted, but Brad is so busy that he kind of hangs out for like a week or two, and then he has to go and do his thing. So we're always happy when Brad's around. Very big contributor here. So as I said, what I think happened, right? What I'm assuming has gone down is that everybody thought price was going to go up. People went long. Price was allowed to spike long to get people excited and into the trade, and then price crushed down to get liquidity. And what's a liquidity, right? Well, okay, so when this is for the beginners here, right? So when somebody enters a trade, what happens is they enter at a certain line, and represented by where the blue meets the green. And at the top of this box is where people are going to exit their trade in profit. So when price goes in their direction, then they're going to go ahead and get out up here and take some profit and win their trade. If price goes against them, what they're going to do is they're going to have a place that's measured using certain methods that we're not going to get into here. And they're going to exit that trade and just cut their losses. Because, of course, if price continues to go against you, you're going to lose money, right? That's That's just how that works. And so now if price goes against you, there's a decent chance it's going to continue to go against you. So you need to get out. And there's a way to measure the optimal point of getting out, because again, we're not going to get into the details here, but that's that. So here, price swept the lows where probably most people's stops were. Gathered liquidity, which is those stop losses, right? Because these stop losses are just sell orders. So when you're buying, when you're going long, you effectively have a buy order, right? And now you have bought, whatever it is, this asset pair. In this sense, you've bought the dollar in terms of the Canadian dollar. And then price is heading up because your dollar is getting stronger. And up here is a sell order. At the top of this green box, you sell and then you take your profit. But if you buy something and price is going against you and it becomes cheaper and you are losing money, then you're going to have to sell it at a loss so that it doesn't create more of a loss. And those sell orders, like I said, are based on usually a pretty simple model that we teach over at algofactory.tech. And then what the market makers who have the $25,000 a month Bloomberg terminal or whatever it costs, they know where all the stops are. They have that data. They pay a lot of money, so they have access to that data. And then of course they also have millions upon billions of dollars to push price down to this area. And if it is cost effective, they'll push price down to have those sell orders happen. And then what they'll have down here is buy orders. And then they'll go ahead and fill their longs, and then price will head up and they'll take their profit. So this is typical of news events. Now, all that stuff I just said with the market makers and pushing price around and all that, that's all, it's known that it happens. I don't talk to those guys. I don't say, "Hey, John, did you do this today?" And they go, "Yeah." Like, I don't know that to be the case, but I pretty much know that to be the case based on just, what everybody knows. It's kind of a common knowledge thing that this is like, I'm like 99.99% sure that this is what's going on. And this is why I don't mess with news, right? This is why I don't trade news. I'll wait for the news to pass. And in this particular case, if I were trading the euro right now, this is the 1 minute chart. So I don't really trade on that. The lowest I'll trade is the 5 minute. And even in that, I need a lot of volatility, right? The general direction for the euro right now, or the Canadian, I should say, is up. However, it is also up against a lot of resistance. So what we're probably going to see is kind of a slow climb up. So what I'd be looking for is maybe on a little bit higher of a time frame. If I were to trade the Canadian dollar, right? It's right at a resistance right now. Okay. And that is reflected in the algorithm as well. So, price has gone up. And if I look back far enough in time, I'll probably see some kind of, structure. We can go ahead and do that as good practice, because that is really what I always do, is I look back in time for structure, and you'll see it right here. So this is back in March. And so in March, there is some older structure. Let me get rid of this data on the bottom there. Okay. So there is structure there, and there is structure not as relevant right here. And there's structure everywhere, but these are the ones that are in the way of price. So I would expect price to kind of slowly rise up in this direction. And then now we have our structure mapped out. So let me go to a lower time frame, maybe the 30 minute, and see how I would trade this. Given that I think price will kind of wag up into that direction, right? It's not going to necessarily, it never goes straight up, but because of the resistance against which price is moving, I would expect to see a pullback, which we are now seeing. But I would wait. Okay, so this is how I would run this. Local resistance right here. Lots of attempts to break that. One attempt here based on market data. Price looks like it's going to kind of head down for a minute. I don't know. I'd have to kind of look here to see. Yeah, so this is what I think will happen. And again, I could be wrong on this, and I would not trade this until it actually happened, right? But I think we're going to see price come down towards this area. May not make it all the way. We have a little bit of a range possibly developing. And whether a range develops or not, at some point, price will stop bouncing around in this area and then head up, right? So I could look for a breakout above this line to enter the trade, but here's the problem. You have price also creating this little bit of structure. So it really depends on what's happening with the algos. But ideally, I could enter the trade before this structure and have a good trade, but it might actually be that I have to wait for it to go above that. And then price, once it goes above that, it may and probably will have some kind of a pullback, and then I can go long up into this area. So my trade probably would look something like that, where I enter at that pullback. Or if the algos were kind of strong enough in that direction, I might enter right at the breakout, but there's going to be a lot of false breakouts. But the structure that's blocking everything is local and not so strong. So there's a decent chance playing that breakout will be a good way to go. But after every breakout, there's almost always, at least on a lower time frame, a pullback. So I might look for that pullback, enter, say here, have a stop relevant to the pullback, and then have my profit taking up here. And if I'm algos are telling me I may have an extended target. It just depends on how price is moving, what the algos are saying, and I could even have extended targets way up here. But chances are, because of this structure, price is probably going to retrace and then head back up. So I'm probably going to want to take profit actually before this line, that structure that from way back when. I'm probably going to front run that a decent amount, like maybe here. And then I'll probably take profit there and then wait for price to, maybe go back above that older structure and do the same action that we saw here with a pullback and a move up. That's probably the best way to go, in my opinion. Brad's asking about the EURUSD. It's I can tell you that's what I've been following, and the euro is reacting to a short-term strong dollar that's actually the product of a long-term strong dollar. So the dollar, like we talked about at the beginning of the show, the dollar was like pretty strong there for several months, and then it was kind of taking a break and still is. But within that break that it's taking, it is actually having a moment of strength. So let's kind of graph that out. Okay, so okay, it's the 30 minutes. So let's actually go to a higher time frame to describe kind of more what's happening with the dollar. Let's try the daily. Okay, so think about this is if you look at the daily chart, this will take you all the way back to like July, or I should say really 17 July. Now, if you look on a much higher, like a kind of a higher time frame basis, going back to 2021, okay, going back to January, like right at the beginning of the year, you can see that the dollar got strong because this is against the euro, so it's weak, right? And so price is heading down, 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 okay? So that means that the dollar is strong, strong, strong. Well, now the euro is getting stronger, so the dollar was getting weaker, and now the dollar here is taking a break. So the break that is happening is there's kind of a temporary price discovery, if you will, where a sort of a range has been created. It's not a very well-defined range per se, but one could kind of paint a range around it if one could find their rectangle, and it would look like this. Okay, so it's, the dollar and the euro are sort of in an agreement right here where the strength is duking it out. But in the meantime, within this range, we're seeing that the euro got stronger, the dollar got stronger in this short-term moment, right? So this is from, say, July until early October, which is this month, right? So what's happening now, though, is that temporarily the euro is fighting back. And I say temporarily because I think the dollar is going to resume its strength. The dollar itself has pushed the euro down. Let's see here. Down to a prior support. So our support for the euro is the bottom of this box, essentially, or this one. You do have this move down to this line right there. So either way, the euro was pushed down into this area and now has bounced off of that. But I think the dollar in its kind of, let me delete that. Go to a higher time frame, look at the algos, but I can almost guarantee you that the dollar is gaining strength against the euro at this point. What am I on here? The 5-day. Let me take a look at the monthly. Let's go to a much higher time frame for this. Okay. Yeah, I mean, as it stands, the dollar is stronger. But I mean, that's just things are evening out a bit, but still, I think the dollar has the upper hand on the longer term. But that upper hand has gotten less significance, which is why we see this bounce around. So the question will be is whether or not the euro will break this move down. And what we're looking at really is like almost like a bear flag. And I do like flags on a higher time frame. How would I draw this? I think I like this. Flags are a bit subjective in a way. I mean, they are and they're not, but I would say that would be my bear flag. So it's the opposite of a bull flag, right? And so basically price would break below possibly and then continue downwards. And the most it would continue down would be the length of that flagpole. So if I were to simply copy and paste it and then move that down, if in fact price broke from its current area, it would head down to parity, right above parity. We did review this recently, so this should be like in the last few days we did something similar, but with using different metrics. But it doesn't mean that it's going to extend all the way down that low. I know parity, which is down here, which is 1-to-1, which is where the dollar and the euro are worth each other, which is really unhealthy for the euro because the euro is tended to be a bit worth, I think it was a bit more than the dollar, typically, right? If you look through history. So, and that's more of an equilibrium based on the way things are the last 20 years. Well, things are changing, right? So if in fact price did that, what we could do is use a fib extension tool to get some targets on the way down. This is high time frame. So we're looking at what's happening in the next few months. And those of you who've been watching and are Algo Factory members know how to use a fib extension tool. I have taught that. If anybody needs to see that again, let me know. But our targets, if we're looking at sort of these midterm next few months targets for the euro, would be down at one, or at least our fib levels are down here, right? So now, what about old structure? We want to know what that looks like. I mean, we know that price did make its way down below parity to 95. 95, whatever a denomination of a euro is, 0.95 euro to the dollar. And we do have this old structure. So really, where is structure? Well, you have some structure right here below the 1272. So I would look to take profit before that if I were in this high time frame long. And then we have some more structure that is before the 1618. And then we have some structure that's just below the 1618. So really, these fib levels are not bad areas to look at for your algo to tell you to take profit, or if you just want to take profit at those levels, that's possible. Again, do your own research. This is just my research, so do not trade based on my research. Oh, thanks, man. I appreciate that. Brad, thanks for the compliment. Doing what I can. So yeah, that's what I expect. But you know what? I mean, look, this may not break below here right now. This may actually end up, bouncing back up in the range, and then we don't see this until 2024. Like, that's really all going to depend on a lot of things. Among them, probably have to do with conflicts and prices of things, and I can tell you war is expensive, and it causes some issues, but war does tend to also accompany financial depressions, and it seems as if a war has been brewing for a while, probably since 2014, 2016, and they tried to start one up in Russia and Ukraine, and it seems like that's so far been kept under wraps. And now they're trying to start one in the Middle East, and they may well get it. I can tell you right now, if we go into a wider war, this is going to be there's going to be a lot of volatility in the market. I mean, we never want to see conflict. That's not a good thing. But if there is going to be conflict, then we may as well use our skill set to try to profit and then financially insulate ourselves from the issues that come with conflict. And here to talk about that is the Gorilla. What's up, brother?
Hey, man, my bottom is always in. That's the way to avoid conflict. Anyway, folks, I want to thank you guys
way to bring the gay.
That's how I do it, man. That's how I do it. I'm not afraid. I'm not afraid to take a stand.
No, you're not afraid to take a stand. More like a kneel.
I'm not afraid to wear knee
Why don't you
pads.
give us a send off, bro? We just finished up with the beginner live
Perfect.
lab.
Listen,
and I'm gonna throw the QR code.
Listen, all you maniacs, join us in the private lab. It's well worth the price of admission. What you're getting is absolutely bonkers. You'll be learning not only how to trade, but you'll be learning how to construct the very algorithms that will absolutely radically change your life in terms of profits and your bottom line. It will do everything for you. You will lose weight on the algorithms. The algorithms will
making promises that don't exist. Shut up. We're not losing weight. We told us it was going to lose weight. Now we're going to sue you.
I've lost 15 pounds since I've been on the algorithm. I regrew my hair since I've been on the algorithm.
Right.
I last much longer in bed, and I no longer suffer from erectile dysfunction.
Yeah, a certain body part grew while I was on the. Yeah, no, it's we don't make those kind of promises, folks.
No. But we will promise that you'll learn something. We promise that you will make a positive impact on your bottom line. And with that being said, Cowboy, let's get into it. Plunger. Brad King, I see you.